Hello and welcome to this session. And I believe it's a series of psychological perspective in terms of trading. And I want us to build a strong psychological muscles so that we can be able to trade profitably. Remember, when it comes to the financial markets, trading, investing, it's 80% psychology, 20% mechanical or structural, right? So now, when you talk about today's topic, the mental shift that turns traders consistent, you have to understand that in trading, consistency is very important as well as discipline. But today we are looking at the consistency aspect of it. But to kick start off, um, you have to understand, or maybe probably, if I was to ask you a question, what if consistency isn't about finding a better strategy, but changing how you think? What do you think that could be, right? What if I told you that consistency in trading doesn't come from finding a better strategy? Where do you think it comes from, right? Where do you think it comes from? And the best thing or the key thing that you need to understand is that consistency comes from changing the way you think about trading altogether. Okay, so and you have to understand that consistent traders, they focus on executing a process and not making money, right? So most of traders, they spend years searching for perfect entry. We have been there, I have been there, looking for that perfect indicator, looking for that perfect strategy. But consistency rarely arrives when they find a new setup. They still don't realize consistency. So, and the reason why I need to understand that consistency arrives when most of the traders experience a mental shift that changes how they approach the market. And in this particular video, what we're going to be doing is that I'll be showing you the mindset that changes, or that separates the mindset change that separates struggling traders from consistently profitable traders. So this video is mostly for traders who keep changing strategies or hopping from one strategy to another, those traders who feel stuck at break even, those traders who are experiencing ups and downs in the financial markets or in your trading, those traders who have knowledge but lack consistency, as well as maybe probably those traders who believe profitability is just one strategy away. So if that sounds familiar, then this video is for you. Like I have said, the key shift here is that consistent traders stop focusing on making money and they start focusing on executing a process. So that's where you need to begin from. I know we all came into the financial markets to make money, but you have to know that money is secondary, such that now you put money behind and you focus on executing a process. Because if you focus on executing a process, that's how you create consistency. And after creating consistency, then money is as a result of that, right? Money is as a result of all that. So that single change transforms everything. The moment you understand or you shift or understand that consistent traders, they stop focusing on making money and start focusing on executing a process, that single change will transform everything in your trading. Okay, so and let's begin by looking at the beginner's mindset versus the professional mindset, because we need to look at these both the mindset so that we can be able to demystify what we are talking about when we say a mindset shift that creates consistency. So for beginners, most beginners think in terms of how much can I make today, how many pips can I catch? How quickly can I grow this account? That's how the beginners think of it. Their attention is always on the outcome, right? Their attention is always on the outcome. But professional traders, they think differently. And this is how you need to start thinking for you to realize consistency. So if you look at the consistency traders in terms of how they think, they focus on following their rules, they focus on managing risk, They focus on executing setups, right? On executing setups, and they focus on protecting capital. Why do they focus on all that? Following rules, managing risk, executing setups, and protecting capital? It's because they understand something most beginners don't. And what is this that they understand that most beginners don't? They understand that profits are an outcome of a good process. Okay, profits are an outcome of a good process, and that's another mindset shift that I really want you to have, beginning now. The moment that you have listened to this video, beginning now, start focusing on the process. Have a good process, and profits will be an outcome of that particular good process that you will have. Okay, so then there is the aspect, the shift. All right, the other shift is the shift from prediction to probability. So I want you from today to start shifting from predicting the markets to thinking in probabilities, because one of the biggest breakthroughs in trading happens when you stop trying to predict the market. And many traders, they wake up asking, what will price do today? Right, what will price do today? What is the highest probability scenario and how will I respond? That's how the professional think. All right, so most of the traders, they predict, and what they predict, how they predict, they ask themselves questions like what I've just said: what will price do today? But look at the professionals, they ask, what is the highest probability scenario and how will I respond? There is big difference between these two kind of questions. Okay, so beginners or most of the traders, those who don't have consistency, they ask the question, what will price do today? But professionals, they ask the question, what is the highest probability scenario and how will I respond? And the reason why you usually see, anytime for those who have been joining the analysis, when I'm analyzing the market, I usually look at it in terms of probabilities. So we look at maybe probably the highest probability if it's a buy, but we still have to look at the sell side probability just in case the market doesn't buy, because it's not a guarantee that the market is going to go our way. So how do we counter that? So we have to start thinking in probability. We shift from prediction to probability. Okay. So, and the difference is very huge, by the way. Prediction is what creates pressure. Okay. Because the moment you predict, it will come with some form of pressure. But probability, when you start thinking in probability, it creates flexibility, and that flexibility comes with a peace of mind, because you know how to approach the market either way, right? So if you're looking for buys and it doesn't buy, you know how to counter, maybe probably, and enter your sales or sales position. Okay, so when you respect or when you accept that no setup is guaranteed, trading becomes easier, ladies and gentlemen. Remember in our previous session, YouTube live session that we did, we talked about emotions, especially when it comes to losses, how to deal with the losses. Okay, and this is also another key aspect that can help you be able to react on losses or accommodate losses or be comfortable even if you have a losing trade. Is the moment that when you accept that no setup is guaranteed, trading becomes easier. And that's now thinking in probabilities. Okay, so the other shift that you need to understand is the shift from winning trades to executing trades. That is very, very important. Shift from winning trades to executing trades. And you realize that many traders, they judge themselves based on outcome. Winning trades, you think that you're a good trader. Losing trade, you think that you're a bad trader. And that's a very dangerous mindset, by the way. A winning trade can be poorly executed. A losing trade can be perfectly executed, but still it ended as a losing trade. And therefore, what you need to understand is that consistency begins when you evaluate these three things. Number one, did I follow my plan? Number two, did I respect my risk? Number three, did I wait for my setup, irrespective of the outcome of that particular setup? Okay, irrespective of the outcome of that particular setup. Because the moment you judge yourself with the outcome, winning trades, you equate yourself as a good trader. Losing trade, you equate yourself as a bad trader. That will hinder you from being consistency, right? It's a dangerous mindset, right? So from today, let's cultivate the aspect of evaluating not the outcome, but mostly those three things that I've talked about. Did I follow my plan? Did I respect my risk? Did I wait for my setups? Because the moment you focus on that, you'll be building, or you'll be sojourning on your way to coming up with a very good execution, right? Very good execution. And a good execution is what really creates consistency. Okay. So don't ask yourself, did I make money or did I lose money? No. From today, stop focusing on that. That is secondary. What is important, what is key, what is foundational here, what is fundamental is that, did you follow your plan? Did you respect your risk? Did you wait for your setup? That is very, very important. And at all time, ensure you follow your plan, ensure you respect your risk, and also ensure you wait for the setup, all right? Ensure you wait for the setup. The fourth shift that you need to understand is the shift from excitement to professionalism, okay? The shift from excitement to professionalism. So, what you need to understand is that at the beginning, trading feels exciting. And I've always said, if your trading feels exciting, then you are still not yet a consistently profitable trader. Because why does it feel exciting? Right? Maybe probably you're excited seeing basically taking trades. Like for instance, I'll give a very good example. When I began, I was very excited seeing just trades running in my MetaTrader 5. Yes, I wanted them to be in blue, but most of them, they ended up in red. So I was trading from excitement. Okay. So what you need to understand is that every candle feels important. Every candlestick feels important. Every move feels like an opportunity, right? For beginners. Every candle feels important. Every move feels like an opportunity at the beginning of your trading. And that's some of the things that create excitement. But when you look at professionals, um, professional traders, they eventually come to realize that trading should feel boring, right? So if your trading is boring, then you are consistently profitable trader, or you are on your way to being consistently profitable trader. So your trading should be boring, because most of the time, once you analyze the market, most of the time you'll be doing nothing, just sitting down and waiting for your setup to materialize. Okay. So, and why does your trading feels boring? Not because it's uninteresting. No, not because it's uninteresting, but because routine has replaced emotion. So when you replace routines with emotions, right? So your trading becomes boring, and consistency is built through repetition, because routine is another name for repetition. So when you replace routine with emotions, I mean, when you replace emotions with routine, or when routine replaces emotion, then there is that aspect of repetition. And consistency now is built through that repetition, not excitement. The goal is not adrenaline. The goal is execution, right? The goal is not adrenaline, but the goal is execution, right? So the fifth shift that you need to have, right, for you to become consistent trader, is the shift from the outcome dependence to process dependence. Okay, outcome dependence to process dependence, and this is where many traders finally break through. The moment you grasp this, this is where most of the traders break through. But before I proceed, make sure, if you're watching this for the very first time, please ensure to click the subscribe button, like, and also share with someone, because it might be this the kind of information someone was looking or waiting for or searching for. that can create that shift in their trading. Okay, so, and for those who have already subscribed, thank you so much for your support. I really appreciate and honor you. And man, this is what I really love doing, basically trying to improve your trading. And thank you so much again for your support. I have no words to describe how grateful I am for your support. So let's proceed. Shift from outcome dependence to process dependence. So I've said this is why many traders finally break through. Instead of needing every trade to win, every week to be profitable, every month to be perfect, um, consistent traders focus on following their system, gathering data, and improving execution. Okay. And from that, their confidence no longer comes from profit. Their confidence is not derived from profit. It is derived from discipline. It is derived from discipline. And that's far more sustainable, right? That is far more sustainable than just outcome or profits, etc. Okay. So that's very much far more sustainable. So from today, shift from the outcome dependency to process dependence, right? So what consistent really looks like, now that we have looked at the 5 shifts, right? Now that we have looked at the 5 shifts, and just to summarize very quickly, the first shift you have talked about the beginner's mindset versus the professional mindset. So we need to shift from the beginner's mindset to professional mindset. And then the second shift is the shift from prediction to probability. The third shift is the shift from winning trades to executing trades. And the fourth shift is the shift from excitement to professionalism. And the fifth shift is the shift from outcome dependency to process dependency. Okay. Now, once we have that kind of shift, or once we adopt those shifts, it's also good to understand what consistency really looks like. And to be able to understand that, think of it this way. Most traders imagine consistency as winning every day, never having losing streaks, and constant profits, right? But understand that reality is different. That is not really the true consistency. Consistency, when we talk about consistency in trading, it means consistent execution. That is trading one setup all through, one strategy all through. Consistency, risk management, right? So you're risking maybe not more than 2%, or maybe 1% or 2% or 1.5%, but you're consistent in terms of your risk management. You always take partials and put your stop loss at break even when you have trades in profits, right? Consistent decision making, right? So that is what consistent means: consistent execution, consistent risk management, and consistent decision making, that you are able to follow your plan, your trading plan, your trading rules, to the letter, right, without breaching them. And with that consistency, then once you follow that consistent, or once you become consistent, the profit comes later, right? The profit comes later. But we realize most of the beginners, most of the traders, they chase profit first before consistency, and that's why they end up losing and blowing several accounts, right? So, and the common mistakes here is that most of the traders, they search for the perfect strategy instead of improving execution. Remember, there is no perfect. In trading, the word perfect does not feature in the dictionary of trading. There is no word like perfect in the dictionary of trading. So there is no perfect strategy. There is no perfect indicator. All right. So it's all about probabilities. All right. It's all about probabilities. And the reason why I'm saying this is because I remember myself personally for years. When I was starting, I thought that consistent will come from finding the perfect strategy. I tried. I've learned different strategies. This. I hooked from one strategy to another, but still there was no consistency. And what actually changed my trading was realizing that consistency comes from becoming the same trader every day, regardless of what the market does. And the reason why I chose now to do one strategy, one asset, right, all through. So the reason why now I focus on trading gold, and I focus on trading gold using ICT concepts. ICT concept, to be specific, order block, ICT order block concept. That was the turning point. That's when I started seeing consistency. That's when I started now focusing on execution, risk management. I put it into place. There was consistent decision making because I was following one setup. I was trading one setup, one strategy all through. And from that's when results start coming into place. That's when I started seeing results. Okay, so in summary, what am I trying to say? What I'm trying to say is that the mental shift is simple for you as a trader. It's very simple, but it's not complicated. It's basically all about you stopping focusing on outcome and you start focusing on the process. That is the simple mental shift that you need. So you need to move from prediction to probability, emotions to execution, winning to consistency, results to discipline. And when that shift happens, profitability becomes a byproduct. Okay, when that shift happens, profitability becomes a byproduct. So in the next video, right, in the next video, I will be breaking down why revenge trading feels logical in the moment, because when emotions take over after a loss, bad decisions often feel surprisingly reasonable. Okay, so as I wind up, the key takeaway from this: understand that best traders develop and follow a repeatable process for you to become profitable. Or maybe probably can say the trader who becomes consistent is not the one who finds the best strategy. It is the one who develops the best process and follows it consistently. Okay, right? So thank you so much, and I believe it was of value to you. Make sure, like I said, you like, subscribe, share, and I believe it will be of importance to your trading, or it will help you improve your trading journey. So until the next one, keep safe and see you in the next one.